Let me see if I can get myself in this real quick. So I'm just doing my morning reading. It gives me some inspiration for videos, and of course, everybody's writing about finance right now or about inflation. This is something I read on Substack. The article is called "Inflation to the Nines." It's a little bit political, but we won't go there. But it's just interesting. I noted as I scroll down through here, it's talking about things, women's dresses. I mean, how much they've gone up, women's apparels, medical equipment, all these things are 15 to 20%, 24%. And then you get down to this. And this is what I really wanted to highlight. Uh, and I'm going to try to blow this up. There we go. I'm going to start from the bottom up because what's at the top is really the most disturbing. Clothing materials is up 14%. We'll go up to non-prescription drugs are up 17.7%. Um, admissions to amusements up 20. So if you're going to Disney World, you're going to pay another $20 for a ticket. Financial service charges and fees up 24%. That's interesting. Elementary and secondary 6%. Motor vehicles up 43%. So if you run a business and you need trucks and you need vans and you're leasing these vans, oh, you've got to look at infinite banking. That's what it is so made for that. Infinite banking, some of the books, if you read Nelson Nash's book, Becoming Your Own Banker, there's an example in there of equipment and vehicle leasing. It'll blow your mind. So if you do have a business and you are leasing these vehicles for your fleet, you've got to read that book because it looks to me like you're getting kicked right in the teeth, we'll say right now, with a 45% increase. But up here at the very top, this is the one that caught my eye. Mutual fund sales charges. So everybody that's still in the market, everybody that's still in a 401k, you are now paying. Now, keep in mind that most of these things are up 15 to 25%, most of them. You go leasing, truck leasing, all these things really expensive. Mutual fund sales charges are up 119.8%. So from January 21, they went from 93 to 204.8. That just blows me away. So when times are tough, they're kicking the middle class guy while he's down and taking even more fees because these guys get compensated every time they move your money around inside a mutual fund. They get to charge you a fee. So sometimes if you really look at that, you'll see all these unnecessary charges because they sold you into and out of different investments 3, 4, 5, 10 times a year because they get to charge you a fee each time they do that. And guess what? Now that fee is over twice as much as it was in 2021. So I'm not going to harp on this very long. I wanted this to just be a short video. Just again, if anything from this video, realize nobody is looking out for the middle class person. They're not looking out for the 401k. And everybody thinks their 401k is the safest, best place to create money. If the government creates something, if they create a safe haven where they want you to put money and they say that they are saving you taxes, again, they have created a solution to a problem that they were the cause of. You need to look really closely because they're fleecing you inside your 401k and they're letting Wall Street get away with it. If you need any more proof, I've got plenty of it, but let's just focus on this one that in the last 3 years, they have the mutual fund sales charges, mutual fund fees have doubled, more than doubled. So that may not sound like much to you, but I challenge you to pull out your statements and really dig in and see what the fees are costing you because they do have an impact. They do cost you. And when you're expecting an 8, 9, 10% return in your 401k, which I'll give them that. If that's the case, if you can get that, the rule of 72 says you're going to double your money in something like 7 or 8 years. Let's say that 9%. So the rule of 72 says 72 divided by 9%, you're going to double your money in 8 years. I should have known that math. I'm sorry. 8 years. Okay. So if you double your money every 8 years, you need to get 9%. The cool thing is, in order to double your money every 4 years, You only need to get about 15 or 16%. So the problem with is 8 or 9%, thanks to these fees the mutual funds are charging you, gets knocked down pretty quickly to 6 or 7%. Okay. If you're being charged a point in a mutual fund, it's a whole lot more than a point in an alternative investment. Okay. And some people don't see that. They say, Kent, you guys make fees, you fund managers make fees. Well, I go out and negotiate really good deals so that we get extra points built in. But those points are more significant in a mutual fund than in an alternative investment. Alternative investments are going to make twice, if not three times, what these stock market mutual funds are going to make. So I want you to see that. You know, I'm trying to figure out my potential investors' journey. Some of you guys are oblivious to alternatives. And so, my first goal with you is to get you through this realization that the stock market, Wall Street, mutual funds, the things that the government are pointing you towards, if you really pay attention, the things that they are pointing you towards or making easy for you to get into, those are stealing you blind. Okay. So you've got to come to that realization. I can't help you if you still think that trading stocks, or if you're a day trader and maybe you're good at that, that's fine. I would still caution you to not have 100% of your wealth creation in the stock market, or your retirement, or whatever you want to call it. I would caution you to have at least half of it in alternatives, then go do whatever you want with the other half. And hopefully over a 5 or 10 year period, I'll show you what I can do with the half that you've decided to give to alternatives, because in 10 years I'll double or triple whatever you invest with alternatives. Will we have some losers during that time? Of course. But if you have the ability to allocate over these different asset classes, I'm not just sitting here telling you that multifamily is the best thing. There are so many good alternatives out there, triple nets. You can own that Dollar General you're driving by. You can own a piece of that medical office building where you're going to see your dentist. You can own that apartment building you drove by this morning on the way to your job. You can own those assets, and they are true assets. They are tangible assets that you can own. Okay. So, some of you, I'm speaking to the choir, you are already on board. You realize that the 401ks, the Roth IRAs, all those are just inventions of a government to solve a problem they created, which is excessive onerous taxation. Okay. That's what they're doing. And I even saw a so called expert was arguing with Grant Cardone about 401ks, and the man was saying it was tax free. This man was making content, putting false information that a 401k is a tax free investment. It's not, it's a tax deferred investment. And instead of paying the tax today at a lower rate, you're going to pay that tax in the future when you need the money at a higher rate, more than likely. And it really hurts more then. And the government gets to be your partner for 30 or 40 years while you grow your retirement. So, anyway, this is, I guess, this is a good way to start a Friday morning. I hope, if anything, you see the unfairness of these mutual funds taking advantage of an economy where everything else, inflation is driving things up. You tell me why in the world a mutual fund company needs to double its fees. What happened? I understand why a clothing manufacturer has to raise their price by 25%. I understand that. You tell me why you think a mutual fund company needs to double its fees. Okay. Did inflation really cause that mutual fund company to incur more cost in order to pass something on to the eventual beneficiary of their services? In my estimation, no. I can't think of one thing other than maybe the paper's more expensive in the copy machine. Those are tiny expenses. That does not justify doubling your fees. It really angers me. So, this video went further than I thought it would. Hope you guys have a great Friday going into the weekend. I would love to talk to you about alternatives. If you have questions, reach out to me, comment below this post. If you want me to look over your mutual fund statement and show you how you're being fleeced, I'll do that. It's been a long time since I've looked at one, but we'll find those fees and you'll be able to see that they are indeed fleecing you. I just don't want people to get to the end of a 20, 30, 40-year run with their 401ks, IRAs, and not have what they were thought they were promised. So again, comment below. I'd love to hear what you think about these doubling of mutual fund fees. And again, I hope you guys have a great weekend. Go out, find good investments in tangible assets, and continue to make those investments and reap the cash flow and reap the growth of your equity. Again, hope you guys have a great day.